and so our economy is crashing at high speed.
Removal of the commercial banks are going to be too big to fail systemically, that the entire small banking industry is collapsed. Too bad. And what that's going to do...
All I said was that our wealth is stolen the banks via our money supply. Insanity that's going on today in the banking system. 1971, there was a guy named D.B. Cooper, and he supposedly jumped out of the back of a 727. So what's going on today is deception, betrayal, and collusion. It's about how the central banks of the world, besides they're not really banks, they're really Marxist or central, so how they collude. And they collude with big companies like BlackRock. And so our economy is crashing at high speed. What did you hear in her DBC? Deception, betrayal, collusion.
We all left Monday thinking that, hey, it's okay. The banks are going to be bailed out, and it won't be at the taxpayers' expense, which we all knew was a lie. It would be at your dollar's expense or your deposits' expense, in the respect that the money had to be created out of thin air, and we just figured that would mean more inflation. So all of the banks, regardless of their poor choices, their gambling, if you will, in depositors' assets, and we'll talk about that in a moment, that they'd be bailed out, and that this would just be an ever-increasing party of printing and backstopping the banks. All of the small regional banks will be backed by the full faith and credit of the Fed, so that none of these banks are going, if they fail, they will all be bailed out the way that Silicon Valley. And well, basically what she said was the only banks that will be bailed out will be those banks that have the approval of the majority of the FDIC board, the majority of the Federal Reserve Board. Those are the only ones that will be bailed out. That in our minds, the systemically too big to fail banks was that all of those smaller banks are dead on arrival. They won't be bailed out. And if they're not deemed to be systemically important, then they will have no backstopping. And what that is basically doing is herding everyone into a pen of the 4, 5, 6 biggest commercial banks in the world, or in the United States, the Wells Fargos, the Bank of America, the Citi, the JP, the Goldman. All of them are going to be too big to fail, systemically interconnected with one another through a massive amount of derivatives, whereby if they fail, they'll bring down the whole system. But the little banks who run into trouble, we're going to talk about why they run into trouble in a moment, but those banks, no, they won't be bailed out, and too bad. And what that's going to do is collapse the entire small banking industry, the entire regional bank industry is going to collapse. Who's going to leave their money in these little banks? If you're running a business, let's just say that the Rich Dad Network kept all their money in a small regional bank near your office. People that you've known and trust, and they've been great to you, and they know you by first name, and they know your staff by first name, and they treat you the way you expect to be treated. Not anymore. Those banks are not too big to fail, and if they go under because of the systemic nature of what is happening, they're not going to be bailed out. And it's important to understand something. So all of these banks over the last several years have accumulated with the deposits that they received since the president was able to remove all of the reserve requirements during the pandemic to zero. So most of these banks have virtually nothing in the way of currency on hand. And because they would take these deposits that came in from the depositors and they would buy bonds with them, typically treasuries and in many cases mortgage-backed securities, at rates above what they were paying, of course, to the depositors, but in what was typically considered safe places to be. The problem is all of those bonds have an average maturity or an average yield rather of about 2 to 2.5% and long maturities. And so the problem is that since interest rates have risen closer to 5%, every one of those bonds in their portfolio have lost 50% or more of their value. Now, the banking regulations say that they don't have to mark those to market until they sell them. And so they have a whole balance sheet filled with toxic assets that have lost over half their value or more. So in the case of SVC, when you saw a run on the bank, for whatever reason, you get people running on the bank, because there's so little cash, the reserve requirements have been slashed to nothing. These banks are forced to sell their bonds at a huge loss in order to meet customer demands to get their money back. And if enough people redeem or withdraw their money and the banks are forced to liquidate their bond holdings, which are all have been eviscerated by rising rates, then a large bank can become insolvent in less than 24 hours. And that's exactly what happened. The FDIC can't handle this. Their insurance fund is only 0.03% of bank deposits, roughly $125 billion in FDIC liquidity backing over $9.5 trillion in deposits. So if just one or two banks fail, that's it. That's gone. The overwhelming majority of the FDIC board and members of the Federal Reserve. So they're going to decide which banks are worth saving and which banks aren't. And we all know which banks they're talking about. These are the commercial banks. We are seeing billions of dollars flow into now over the last several days. People are yanking their deposits out of these smaller banks because they're terrified that they are going to pick and choose as to which ones they believe are too important to fail and which ones aren't. Every one of the people who have large accounts at these regional banks are going to pull their money out and they're going to send it over to Citibank, to Goldman Sachs, because they know that those banks will not be allowed to fail.
So a small regional bank is on my property.
And if a bank like that fails, I can pretty much guarantee you, if it's a small regional bank, we bailed out those banks, but not you guys.
How many employees lose their jobs?
A lot of employees. And more than that, how many people are going to lose their money? As it should have happened with Silicon Valley Bank. And they've changed the laws in midstream. Now, I'm going to deviate just a little bit. I'm extrapolating. I don't have evidence to back this, but I want people to think outside the box. So removal of the commercial banks and a central bank digital currency, this act is going to herd everyone out of the thousands of small regional banks that provide customer service in the lobby and a good experience, what banking used to be. Now everyone does it on their iPhone and on their computer. They don't go into the bank as much. There's not as much interpersonal communication and relationships. So those banks are going to go bye-bye because everyone's going to pull their money out of those banks because they're scared. What if you have a mid-sized company with $10 million in a regional bank and you're afraid that if we see more systemic problems, which we will as rates continue to rise, putting more pressure on these horrible bond portfolios, and they start to fail, everyone is going to yank that money out as fast as they can and send it to the big commercial banks. Now, a handful of very small banks are very large banks, a small selection of them. What happens? They herd everyone into a handful of these banks, and then we see a Bear Stearns or a Lehman Brothers moment where one of them is allowed to fail, creating panic. Everyone panics. That money is now vaporized like that. FDIC doesn't have enough to back it. So what happens then? In comes the central bank digital currency on a white horse. We're here to save the day. And this shows why we need to get rid of the commercial banking system, where her whole idea was to get rid of the commercial banks and enact monetary policy directly to the citizen or the consumer on their iPhone directly from the central bank. So all I can simply say to you is this: the banks are in trouble. We're going to increase the tremendous amount of inflation that's already into the system. We're going to increase it to bail out those banks that are systemically too big to fail. And they've already told us it won't be via taxpayer injections or bailouts. They've told us that FDIC only has 0.03% backing, so that won't work. So they'll print money to bail those banks out. But everyone's going to flood into the commercial banks. And then they are ripe for whatever they have in mind. If they let one of them fail, everyone will panic and embrace the new CBDC currency, which we have been told by the Bank of International Settlements that everyone must have. All countries that are part of the BIS network has to have an operational CBDC by 2025. Who knows? Maybe we'll have one much sooner than that, the way that this is all going, but this is very frightening.